let me, all right, let me start that. And yeah, it it's just moving. It's normal. It's just moving right now. And I thought it was news, but it's not. Um, thought this drop here. I thought it was news, but when I look down, all it is like I said, when you get this big move up like this, it has to breathe. And again, if I put this fib on this, I can tell you already know where it's going, right? Where that drop is going to be. And this is why you don't worry about these types of drop. You don't worry when it's got to breathe. And that's what you guys are going to learn. Like, don't try to chase this. Don't try to chase this move up. Like, I'm going to show you when you see these big moves up and you're like, dang, I missed it. That's why it's no need for FOMO, because I'm going to show you how to not even worry about that little move up. I'm just going to take when it go down to breathe, or I'm going to take it after it's finished breathing. I'm going to take it back up to market structure. You see what I'm saying? It's either way. Once you know what you're looking at, I know once you know what you're looking at, and then I'm just going to take it to the 15-minute really quick so you can see the candle the way I want you to see it. So let me take this off. So look at it like this. When you see these big candles like this, let me take this off. Anytime you know that these are institution candles. We know they're institution candles. Now, this is the one time, that I would tell Howard that, yeah, trap just this move, because you're trapping the institution move. You want to see what is these institutions up to, right? That's the only time I'll tell you to trap just this move instead of the whole move, because you're only trying to see this. You're not trying to get the big picture. You're just trying to see what is institutions doing. What is these you see, you get these big candles on a 15-minute chart or higher. Now I'm going to tell you, because you want to trap just this move right here. Show you the move I'm trying to trap. Because these are the moves I'm trying to trap. I'm trying to see what happened to get these big candles. This is a 15-minute, so this is a nice size candle on a 15-minute. So I'm trying to see what happened in here. What was going on? Was it news? Was it what? So you want to see what happened in there, because this happened at 6. This started at 6 o'clock. Okay, but 6 o'clock opening bell was over and it went back to structure by 7 o'clock. So what was y'all doing between 7 and 7:30? What was y'all doing to make this market go up like this? Well, it wasn't any news. So what was going on? So now you just want to trap this move. So if I'm only trapping this move to see what's going on right here, bam, where did it hit? 50%, right into the 50% and went back up. So when you were seeing these big candles, don't try to chase these candles. Wait for your candlestick that tells you, I think they're done with the move up, right? So now you could take this, if it go, once it crosses the 23 on down, this is when you go down, you're going to drop to the lower time frame. So I'm going to go to like the 5-minute, and I'm going to look at it. I'm going to say, okay, it closed below the 23 right here, right? It closed below and open right back here. Well, now we're going to take this fib by fib. I know it's going to drop because it's a valid retracement. I know I'm going to take it at least to the 38, right? So I'm going to take this from here to the 38. That's how many, that's my first TP is the 38, right? So this is my first TP is the 38. So I took it, I got in here, my first TP is the 38. Now they close below the 38. Okay, so I know the next TP is the 50%. So now I'm gonna get in the second trade and I'm gonna take it, I'm gonna enter here and take it to the 50%. And that was in a matter of less than an hour, 30 minutes, 2 candles. You're done with your trading for the day. In 30 minutes, you've made, and your high is you've made, oh, I did a long, sorry, you guys. I'm like, what's wrong with this? This was the first move. So in 30 minutes, and you right above this candle, right? even if you stayed in and just waited into the 50%, because that's generally not, but you can even walk it down slowly. So even still, you went 60 points, 59, 60 points in NAS. That's even, you know, with that's a nice piece of change.
Yeah.
In 30 minutes. In 30 minutes. So what I'm saying is you never have to chase a move up, because you don't know where you're getting in and you don't know where it's going. But I pretty much have an idea of where it retraces to once I got a valid retracement. You might not know where it's going, but I know it retraces to certain zones. So I know that if it validates the retracement by closing below the 23, I know the next place is a 38. And if it closes below the 38, I know the next place is a 50%. And if it closes, you know, below the 61.8, I know the next place is possibly the 786. Now this one is a you know, right, this after it closes past the 618, that's kind of an iffy situation, but I know for sure the 38 and the 50. So if I just trade them moves and I never trade the 786. But again, all you do is you go to a lower time frame, because what's on the 50 here may be showing you movement to the 786 on the lower time frame. Or what's showing to the 50 here may show on the 15-minute that it's gonna, you know, or the hour actually, that it's at a different space. So that's what I'm trying to say. Like, you can check when you see these big candles, these are Kool-Aid candles, whatever you want to call them. This is institutions moving this up.
Yes.
This, like, even here, this is institutions. So, but also remember, when you see these moves like that, they're going to, because what they're doing is, and I'm gonna try to explain this the best way I know how. They're putting in fake orders, basically. They're not fake, or, you know, they can't call it that because that would be illegal. But they're putting in orders. Remember, on every true contract, so to speak, there's a buyer and there's a seller. Usually you don't have the buyer being the buyer and the seller. So when you see them institution candles, that's what's happening. The institutions are being the buyer and the seller. So they're moving it.
No, go ahead. I'm listening. I'm not sorry about that.
Go ahead. Oh, okay. I thought you were asking a question. So the buyer, when you see those institution candles, the institutions are being the buyers and the sellers. So they're taking both sides of the trade to push the market where they want to push it. So that's why I call it a fake sale. It's a fake trade, right? That's my word for it. But that's legally, they can do that. You can buy and sell the same if you want to. That's what you can do. So they are to push the market into the direction that they want it to go. They are taking both sides of the sale. Well, now that means I've won on one side and I've lost on one side. If you took both sides, you've won on one side and you've lost on the other side, right? So if you won on one side and you lost on the other side, in order to break even, I need to get to at least 50% on my sales on my losing side. Do you guys get that? That's why they always go at least 50% of a move. They come back every time you see these big moves, they will come back at least 50% because they need to at least break even. Got it? So because remember, think about it like this. If I made, I'm gonna just put it, if I made, I'm making it even numbers. So if I moved the market up 200,000, right? If I moved the market up 200,000 and I made 200,000, right? Now I made 200,000, but I also lost 200,000 on the sales, right? Because I'm on both sides of the trade, right? So now that I'm on both sides of the trade, I won 200,000. Now I lost 200,000. So just think about this. I basically, I'm even, but I don't want to be even. So now I'm going to close out my buys, right? Because I moved the market up. I'm going to close out my 200,000 I made in buys, but I still have this 200,000 in sales that I lost money on. So if I could just get half of these sales, 100,000, right? Half of these sales, right? That means I lost 100,000, but I won 200,000 over here. Get it? So
Mhm.
I'm gonna take this 100,000 of the 200,000 I won and move it to this 100,000 after I take it to halfway, right? So I broke even on the loss I had, and I still made $100,000 over here. Now I'm gonna let the market go back up. And what is it doing?
I don't know.
Because now I'm not manipulating the market anymore. So the market returns to market structure. Because I've made my 100,000 that I was trying to make. Now I've covered my losses. You see what I'm saying? I covered my losses. I made my, because remember, I only need to take it down to 50%, because if I take it to 50%, I get to keep 100. And then my loss goes from 200 to 100. Now I take 100 of my 200 over here that I made in the buys and apply it to this 100,000 over here. So that broke even. And I still have 100,000 over here that I made in the buys.
Mhm.
So now I didn't play my game, made $100,000, manipulated, took all the 100,000 from the retail traders that don't know what I'm doing. And now I can let it return to market structure. I'm not playing anymore in the market. This is institutions. Nina, I'm gonna let Nina answer a question, then I'm gonna ask you guys, do you get it?
He was before me.
Oh, I didn't see his hand. Okay, I mean, okay, go ahead.
Go ahead, Nina, go ahead, because I got that. Go ahead, Nina.
Okay, because mine is quick. Okay. All right.
Okay.
So you had
I have my
mentioned,
hand up too.
I'm gonna entertain.
I didn't see your hand. I'm sorry, Janet. I didn't see it.
Yeah, okay.
You were clapping, Janet.
Oh, was it? Oh, shoot.
Yeah.
Okay, I'm
Oh,
sorry.
it's all right.
I see the raised hand at the bottom now. Yeah, you're right. I would have the wrong thing. Okay.
So you
Okay.
had
Nina,
mentioned
it sounds like you're far away, Nina.
Oh,
I can barely hear you.
oh, okay. Hold on just a second. I'm unsure. Okay. Does this change anything?
Yeah, it's just your mic seemed like you're far away. We could hear you, it just
Oh,
seemed far
okay.
away.
I'll just move it closer. Okay. Am I still good? Hopefully. Okay.
You
So
good.
this candle here you mentioned once it closes on a 236. Do you
Mhm.
occasionally get in a few seconds before that candle closes so that you can enter here to go to the 382? Does that make sense?
Say it again. Do I
Or do
enter
you
before?
complete do you
I
complete
always enter at a candle close if I'm following my rules. I'm gonna enter after the candle closes, and so I would enter here. I see what you're saying, like, so remember, this is the entrance right here, and then it went up a little bit, and then it came down,
right?
right?
Mhm.
Remember, open, high, low, close.
Right.
So
Mhm.
I entered here, I entered here, and I went a little bit into drawdown, and then it continued down to the 38.
Okay.
So even if it went a little into drawdown, I'm not gonna hold this trade for a long time because I already know, right, that it's on a retracement. I know it's retraced, but we always know that it might go back. So even like for me, I look at it like this. I might have my stop here, right. I would have it right here because this candle was so big, right? This candle was so big, that's why I made my stop here. But normally, if these candle was kind of equal, I would have it at the 11.4. My stop loss, right? Because once it goes back to the 11.4, because sometimes the candle might, but it's a body close and it's on. That's why I like to go no lower than the 15-minute. So like, see here, see what I mean? Like on the 15-minute, it's an indecision candle. It was going up. It's an indecision candle now. I know that the strength is not in the buyers anymore. And I know for a fact that this candle is institutions manipulating. I know it is because it's no reason to have. Anytime you see these big candles, if it's just normal structure, the normal market structure should it go in stair steps. That's normal. You have some buyers, you have some sellers, you have some buyers, you have some sellers. That is the normal market. That's why they call them engulfing candles. When them big engulfing candles is not retail, that's not normal trade activity. That is somebody like somebody taking over. I'm taking control. We as retail traders do not have the funds to do that. So that's why they name them institution candles. Institution candles, engulfing candles, Kool-Aid candles, whatever you want to call them. This is not normal movement in the market. That is never normal movement. Normal movement is stair steps like these. This is normal movement. This is, I have some buyers, I have some sellers, I have some buyers, I have some sellers, I have some buyers, I have some sellers. You know, these normal, you know, each candle being, you know, kind of about the same. That's normal movement. This progressive move up is normal movement, not these big jumps. The big jumps is market manipulation. So for that reason, I see these two candles that this candle engulfed it didn't fully engulf, but it basically, it took over the move of these two candles right here. Took the whole move back. Retail traders don't have the money to do that. So then I got an even bigger candle on the next candle. Retail trade, that's not normal movement. So then when I got to here and I see this next candle that is an indecision candle here, I know that the bank is taking their money out. So that's why the candle is, you see what I'm saying? I know that the bank has now decided this is the point where they've decided to take their money out. And now, once they've taken their buys out, they got to get at least half of the money that they used to push it up this high. So they got to get at least half of that money back to break even on their losses. You get it? So they got to get at least half. They made their 200. Now I gotta break even over here. So now I'm not gonna mess with it too much, but so if I take all the money out of the market, what is it gonna do? Drop. So now it dropped. It dropped, this big drop candle. It dropped. Because the bank that had all the money took their buys out. What's left? Sales. It's going to drop. So now they're gonna drop it to 50%. All they care about is getting break even. Now they got their 50% mark, they break even. Now I can close my sales because my sales are break even now. I'm out of the market. Now the bank is not manipulating the market. Now it's just normal market structure. Look at my candles. I now have even candles. These are even candles, stair stepping up. Now I'm back to market structure. That's I'm giving you guys candlestick analysis and institutional trading in one. So that's what it boils down to. Looking at the candlesticks tell the story too, because this is the normal progression of candles. We got normal movement, back and forth, equal movement. This is not normal movement. This is the bank. This rejection is like, this is the bank got to its number. Whatever they want their number was that they said, they got to their number, they pulled out all their buys. If you pull out all the buys, it's going to be an uneven market. It's going to be a lot of sales. So that's why I dropped. Got it?
I'll never look at morning and evening stars the same. Thank you.
Oh, I'm sorry.
That's
But
what I see. What I see.
But
yeah.
it's like they're giving you the pattern, right? Like I'm not calling it a morning star or even, but I'm giving you what's happening when it makes a morning star. Like they'll tell you like a morning star pattern does this, right? But I'm telling you what's actually happening when it creates a morning star.
Right. Got it.
Because
100%.
that's great to tell me to look out for the morning star, but I'm like, okay, well,
What's that?
I know the morning star is going to be this, possibly this, but okay. But if I understand the mechanics behind it, I'm like, okay, because I'm telling you so you can catch it before the morning star is formed. Because you are getting it afterwards, after it's formed. I'm telling you while it's forming, so you can catch it when you see when you see a big institution candle, wait for the end of the institution candle. Because at the end of the institution candle, when they're done and they get their money out, and you're going to see that with a rejection to the upside. When you see that weak rejection off of two big candles, know that it's going to go to at least 50% of that move up. They're going to take it back down to at least. So now you can catch that move down. Get out at 50%, wait for them to let it go back to market structure, and get in and take the ride right back up.
My question and comment is, thank you for, I love the fibs. And this is something that when I first started learning, I wanted to really understand this. So whenever you start talking about it, it warms my heart. And I'm thankful that today we have the opportunity. We were derailed, but now this is what we need.
Mhm.
This right here is what we need to hear and see those small little moves where we don't need no big moves, and understanding that when it goes up 50%, that it's going to go back in the other direction 50%. Looking at your morning stars, that is a pattern right there. I took a picture of it. And I'm going to be talking about it in my trading when I'm talking to people in my group, so that we can early on and train our eyes and ears to see this. So thank you.
Yeah.
Oh
You're
yeah, but my question,
What's your
this is why
question?
my question was, I'm looking at your fibs, and I fib mine, and I don't have all those levels. So is this something that's programmed into your
Yeah,
other?
so you can change your fib levels. So these are my fib levels, but you can make your fib levels whatever you want. If you go here, you can check, you can make
Yeah,
more
I
or
know how
less.
to do that. I wrote the numbers
Okay.
down, so I'm
Ooh.
gonna put those numbers in there, right?
Nina, don't tell me you didn't know this. Oh,
Didn't know what? The fib
Oh,
oh,
stuff?
I thought you. Oh, I
Yeah,
thought you was, yeah, about the fibs. I'm like, because you look like you did a shock face, so that's why I said that.
Oh, no, I was looking at my charts. Yeah, I'm looking
Oh,
at the
okay.
market. Yeah, looking for some
Keep trading
entries.
over there.
Sorry.
Okay, my bad. My bad. Okay. So yeah,
Yeah,
you can go up
I
and
gotta put
program
that.
it how you want. And then what you do is you save it. You can save it. You can save it as whatever. You can name it what you want to name it and then save it. Y'all know that. You can name any other tools, right? Because then when it comes over here and here, yeah, you can change it to whatever. Instead of it saying horizontal line, you can call it whatever you want to call it. So yeah.
What do you
Anyway.
mean? I don't understand what you're saying.
So like if I create this box and I'm calling this box, so if you go to the object tree, this rectangle is just called rectangle because that's the tool you use. But I can name this either in here, I can name this, check this
Box.
out. Yeah, check this out box, whatever. You can name it what
Oh,
you want.
okay. That's
So when
cool.
you come to the object tree, that's
Yeah,
what it is. So you
and I
know
can pop it up.
exactly what each thing is, right?
Okay.
So I can name this fib retracement on the 15-minute, 15-minute. So I
Okay.
know that when I'm looking in the object tree, which fib retracement it is. You can name it what you want to name it.
Okay. Thank you.
Exactly. Yeah. So just that. A lot of stuff in TradingView. So yeah, so there you go. So I just wanted you guys, but we were supposed to be trading. So let me get to the charts. Sorry. I had to show you guys that because I wanted you to know like why I was looking for that drop. I knew it was coming and just happened to be talking through it. But so now it's at a place where Howard has a question. I'm sorry, Howard. Thank you, Nina.
No, but yeah, but my
Whatever it is, it's fine.
no, I mean, I basically understand, what you said, but you had okay. Would you is the reason that you wait for the two? What is it? To 238, the 236, right?
23.6.
236, because that's sort of like confirms a correction.
I don't know what you're calling a correction.
Okay,
I don't.
correction, but whatever. I mean,
What is a
It's
correction?
considered shallow. I know it's shallow. It's a
shallow.
So, okay, in Fibonacci, you guys know that there's rules to the Fibonacci.
Yeah,
like the
yeah,
number
yeah.
on the tip. Okay,
Yeah, for me, 236. My rules, 236 confirms at least that's a shallow correction.
okay. So what you call a correction, I call a retracement. Okay,
Okay,
so I just want to
retracement.
be clear on that. Okay, so
Retracement,
the 23.6 is what validates, yes, as you're saying, a
Exactly.
retracement.
And
The 38, anything between the 23.6 and the 38.2 is considered a shallow retracement,
yes,
right?
gotcha.
Anything between the after the 38.2 all the way to the 61.8 is a normal retracement.
Yes.
Anything beyond the 61.8 to the 88 to all the way almost 99.7 or something like that is a deep retracement, right? Or correction, whatever you want to call it. So yes, those are right. So until the body of a candle goes beyond the 23.6, I have what I call a pullback and not a retracement.
Yes, we're on the same exact page. So,
Okay,
my-
so
now-
that's why I wait.
So no, that was just my question. My question is, because you actually are literally trading the Fibonacci percentages. So once it goes to the 236, that confirms that the correction is good, and then you take it to the 382, and that's a whole trade.
If you were doing it and now remember, I'm position trading. I'm not scalping. I'm not scalping. I'm position trading. Yeah, so in position trading, yes, my TP1 would be 338.2. My TP2 would be 61.8, somewhere in that area. And then if I had a TP3, it would be somewhere in the 7A, what I call the 7A6 zone, between 78 and 88. Yes, those are, and I just gave you the reasons why, because of the types of retracement. When it goes to retrace, we don't know where it's going to go to, but we know it's going to go into one of those zones, right? So that's why I put my TP1, 2, and 3. If I was to have that, I would put it in those zones. But for me, yeah. So that's the normal way that it's taught. But I teach it to utilize the trade manager. So what I do is, once it confirms at the 23.6, I go in with my trade manager and let my trade manager manage it based on settings that I've created that work with each asset. Because again, how an asset moves, like for instance, NAS and US 30 may move straight to the 50%, right? So I may not have time to put in a second trade. It may go straight through all the way to the 50%, right? But gold, because gold plays back and forth like this, as it goes down, it goes back and forth. I may have 3 TPs, right? Or I may have 3 different positions. I may put a pending order, a pending limit order at the 38 for the second trade, and I may put a pending limit order for the third trade instead of having 3 TPs. I mean, you know what I'm saying? So I may have just one TP for each, but 3 trades. So it just depends. So again, your strategy should not be fixed. It's got to be flexible based on the asset you're trading and the strategy you're trading. That's why you have to get to know whatever you're trading. Gold does not go straight down unless it's being manipulated. It just doesn't. It goes back and forth. Now, it may be making a back and forth and progressing upward, or it may be making a back and forth and progressing downward, but it goes back and forth. So with gold, you can't have a tight stop loss. You can't have a tight stop loss with gold. NAS and US 30 makes big jumps. That's why you need to have a tight stop loss with them, because they do make big jumps and you can jump yourself out of some money.
That's right.
So you gotta have, so you see what I'm trying to say? So you gotta get to know your assets to know that I need to trade these differently. And that's why it's important to create a trading plan for each asset and each strategy within that asset and each account. Because if I'm doing a prop firm account versus a demo account versus a live account, I'm trading all 3 of them differently for all 3 strategies for all 3 assets I trade. So that's 9 trading plans right there.
I'm with you.
You understand? Now, try to keep track of that in your head. It's hard until you get used to doing it. So then, that's why it's like, okay, write it down. And then when you got it, memorized by heart, then you don't need the paper anymore. But until you get there, okay, I'm gonna put this paper in front of me because these are my rules for this trading session. This trading session, I'm scalping, I'm in this account, I'm in my, prop firm account. And so these are the things that I have to do during that time. Okay, I'm trading gold, and this is how it moves. Okay, because you're not going to trade gold the same way you trade NAS and US 30. Because you're going to mess up. I can tell you that. You're going to mess up. You can't trade them the same.
I'm with you.
Okay.
Totally with you.
All right. So right now we can see, if we're looking at NAS, like, okay, so it's pulled back. Let's talk about it. I'm gonna go on a higher time frame so I can see the full chart. Go to the 12 hour just to see. So we can see that, let me take these off, right? So we can see that I'm on the 12-hour or the daily. I'll go to the daily. It's a more normal time frame. But you can see here on the daily, and I'm gonna start all the way down here just because those are incorporated in there. So really, this is the double top right here. But because these are so close, you can see those were so close, but it already passed those, so I ain't gonna worry about it. But you can see this is the double top here, and you can see it within and it's starting to reject at this double top. So you on the daily, you have the possibility of a double top on the daily on NAS, right? So that's another, that's, you know, and this big, this is, y'all gotta see that that's all institution. Y'all have to see that. Now, I want you guys to understand that. Now let's look back and just going by, we're just gonna look at some institutional candles. That's all we're gonna look at. But it's since this double top form, we ain't gonna worry about nothing back here, just since this double top. And this is the daily. So this is some movement here. So let's just look at this. Institutional candle for sure. I can tell you this went down. This went down and look, it went back up at least 50%, right? Okay, these are okay, not no big deal. Totally institutional candle, right? Total institutional candle. It didn't go back up, right? It didn't go back right away. They pulled it down some more. Total institutional candle. That's why I said you wait to see what they're gonna do. It didn't really do nothing. When it didn't go to 50% here, you knew they was doing some more damage, right? Went down again, right? This big push up here told you that this is them exiting out, right? They let go of their money here. That told you they exiting out. So when they exit out, I can tell you, if you take this move, even if you take this individual just on this candle, because it's the daily, that's 50% all day long. But look at, it's never went back to 50% of this candle. If we were in replay mode and it did this, it got 50% of this candle, but it never got 50% of this candle, right? It made this big, they ain't got their money back on here yet. So you know they got to go back to get this 50% of this candle. They got to, right? And that's why you see in the next couple of, oops. If we see, isn't that a big institutional candle to get them back to the 50% of this? They're gonna go back and get their money. We don't know when, but they're gonna go back to get their money. They went back to get their money, right? Now we got regular candles, regular market movement. Now, this is institution going up again, right? They're going to come back to get their money. You see what I'm saying? And you're at a double top, so you have more concern. So my whole thing is, we know the daily candle end. This is on the daily. We got 5 hours left of this. So we're gonna break it down. So we already know we activated a double top with that wick in there. You activated that double top. Double tops tell you it's gonna go, you know, more than likely it's gonna go back down. The validation of a double top doesn't happen until after it passes. It needs to pass the 50%, because it's because if it goes to the 50%, it's just a normal retracement, and it's going to continue up in the trend, right? If it breaks past the 50% on a double top, it usually completes. But we'll know at the 786 zone if it completes, if it's going to complete or not. If it gets rejected at the 786 zone, it may continue up. Okay, so that's how it's still using, again, you see how I'm using all of the tools. I'm using the double top as well as the fibs to know what's going to happen, what are my possibilities. But I don't leave it on just one possibility. I have a possibility that's based on it being a buy, and a possibility on what it's based on being a sell. And that's where I believe educators mess up. They give you one possibility, one directional possibility. You should know that this is why it would be a buy and this is why it would be a sell. You should know both ways. You should know both ways. You're waiting on a move to happen. You should know both ways. If it moves here, it's a buy. If it moves here, it's a sell. You should always have two directional. I teach two directional all the time. All right. So the next thing I'm at the daily, I'm going to drop down to the 4 hour and see, do I see anything in the 4 hour? What do I always talk to you guys about? One candle resistance is where they're usually going to come back to. There is none here. There's no one candle resistance on the 4 hour. So let me go down to the 2 hour. See, I got one candle resistance right here. So this is an area that I want to keep in my mind. Where is this 2 at? Because I got one candle resistance right there, right? So I know on the 2 hour that they may come back to this line, right? Let's go down to the 1 hour because I don't trade on the 2 hour. I got a couple of them, right? On the 1 hour, right? But they're very small. So what I like to do is to place a line there. I'm gonna make another color that stands out for me. Oh no, make it purple. So I'm gonna put a line at those areas now. And you know, if I have to draw a line, I created a tool. Trust that I have a tool for it. Because I don't like lines. I don't like drawing lines. All right. So if I got a line for it, trust me, I created a tool. I'm gonna hide this really quick so you can see. So, right, I'm gonna put one right here too. Put it at the body, right? So these are areas that I know that when it comes back, it's going to come back. Now I'm going down to the 15-minute. 15-minute gives you too much information. I'm not worried about it. So I'm going to go back up to the 1 hour, right? Because these are position trades, not scalps. I really do it off the 4 hour, but I don't see anything that it could tell me that it could come back to. So I'm going down to the 2 hour. The 2 hour tells me there. Just by looking at it without even having to put a fib on this, I can tell you this is about the 786 zone. But I'm going to put a fib on it. If this is where this ends, because we got 13 more minutes for this candle. Where is this wick? This candle is wicking between the 50 up here and the 786. It ends in the 786, these two red lines. I already know. So I know that it coming back to this 50%, it falls in line with that being an institution candle coming back to get at least 50%. So I know right now that once this candle closes, right, I'm going to wait and see what the next candle looks like. If that next candle is a bearish candle, I get any type of indication that candle is moving bearish, I know that okay, this is going to be the high. It's going to end here with the high, right? So now I can put my fib on there with confidence and wait for it to come here to the 23.6. Wow, that's right in line. That you see how close those two lines are? That's right in line with, this is the 23.6. This is right close to where I said that first level on the 1 hour. That first area, matter of fact, is exactly on the line. If I go to the top of it, that's right in line with what I'm waiting for to see if I'm going to put in an order. So you get a little resistance here. It might stop up a little bit, but when it breaks through, it closes below this. I know that I could put a pending order here for a sell down to at least this 38. Wow, isn't it amazing that this 38 lines up kind of almost with, look at this. Wow, amazing. I didn't make this up, y'all. Just the fibs. So this line, this other line where there's resistance lines up right with the fib. That is called confluence. Wow, this next candle right here, I didn't even mark this one. But look at where did it come to? Oh, this next candle of resistance, one candle resistance. Wow, that lines up with the 50%. That is not coincidence. It's confluence. So you know pretty much these are the hidden things that you can see. So I know that this is the time frame. I got 3 confluences on this time frame that is in confluence with the fib, not no strategy, not no theory. It is in confluence with something that is finite, the fib. So I know that this is the time frame I need to be paying attention to. I need to be paying attention to the 1 hour for whatever's about to happen next on here. So I'm going to watch the 1 hour, and this is where I'm going to do my analysis off of. I'm going to put my pending orders off of this time frame. So now I got a pending order here, I got a pending order here, and I got a pending order here. And wow, doesn't this candle end right? You see, I had a 76.4. What did I tell you is the reason I do the 76.4? The reason I do the 76.4, because if you subtract 100 from 76.4, it's the 23.6. So this is the validation on the opposing side of a pullback, a retracement. So that's why I have that there. And isn't it amazing that this white candle ends right there? So that tells me if it breaks past here, that trend is really weakening. This trend is really weakening because now I've validated technically on the opposite side. So and it's weird to know that, but anyway, that's just in my mind, it makes sense. Just know it's like I'm validating on the other side that, like, if I get stopped here and it continues up, that means it couldn't break the 23.6 the other way for me. So I know it's going back up. But isn't that funny that that white ends right at that 76.4? So I'm just saying, so for me, if I was looking at doing some position trades for today, this is what I would do, but I don't have to watch it. I'm gonna put my trade manager settings in to tell it to trail it. And I have so much confluence here, I would leave a wide opening for the trail because I got so much confluence. I know this is when it starts coming down, it's coming down to the 38. And when this breaks through, it starts. So I will have 3 different trades. The only trade that I would really have a tighter trailing loss, stop loss, would be this last one coming to here, to the 786. Because I have such wide rejection in this wick. And does everybody grasp that concept? You know, I'm going into some serious training here, but does everybody grasp that? So right now, what I'm saying all that to say that it's not a time to trade until it's not a time to trade this until it validates for you, because we don't know what it's doing. And I don't like getting in the market other than scalping unless I know what it's doing. And so I don't have a trade yet, but look at what it's doing. It's got 7 minutes left and it's doing what I already know it to do. I know it's going to come back. They're pulling their money out.
Will you have this in the recording for today?
Yeah, it's recording. Mm-hmm.
Well, I can listen to it today.
Yeah,
Okay,
I'll put it in
you.
today.
Okay,
Yeah.
thank you.
I have to wait till it renders the file afterwards, and then I'll it takes, I don't know how long it takes because I don't be watching it, but it takes a minute. It don't do it right away. And then
Okay.
I'll put it in.
Thank you.
I'll try to watch it, make sure that I get it in early. So yeah. So that's the thing. We know that it's already showing you it's pulling back. It was way up here. It's already showing you it's pulling back. So this next candle is going to probably be bearish, and it might hit the 23.6. So then in that next hour, you'll be ready to take a trade down to at least the 38. And then you wait to see what the next candle looks like. And then you can, just depending on how aggressive you trade, because like I said, it could do a candle all the way back down. We don't know. So it's just, looking at the hourly time frame again, because you can always go down to a lower time frame. You don't enter on the 1 hour. This is just your analysis. So my analysis is here, but then, I don't have a bearish candle, but say I get a bearish candle below the 23.6. So anything below 2018, right, is the 23.6. I can find that on the 15-minute. If I see that, it's not there yet, but you already see, look, you got a double top right here. It's already, just based on this double top, it's already at the 50%. So you know it's moving down. You got your RSI telling you it's moving down. It's so many different things. I'm sure if I put this on, it's going to give you indication it's going to cross, you know, past this line, this major. I mean, there's so many different things you could do. But what I'm getting at is, even on the 15-minute, you can tell this move up that I had, and you know, it was move up, down, up. You know, this is them getting in and out the market on a shorter time frame. And that's why I said it's easy to manipulate these lower candles down here, because look, this looked like a big blue candle, and then you got all these this big bullish candle. Now you got all these bearish candles. Now you got these bullish candles. But if you go up to the 1 hour, it's one bearish candle. But it's bullish and bearish in there, right? That's why when I say I don't pay attention to what the the lower time frames are saying, I don't put a lot of salt on it, because look we had two bullish. If you was looking at it, 2 against 1, 2 bullish and 1 bearish run. You had 2 bullish runs, but 1 bearish run, and it ended up being a bearish candle. So again, that's why you go to your higher time frames for your analysis, but I can enter. So if my analysis had already told me that it's going down on the higher time frame, I'm just going to go to the lower time frame to get the best entry. But I'm not going to stake my analysis on that lower time frame. So, I can see, it's going, this is to me, we can look at the charts, but really I don't like forcing a trade. I don't like trading like that. But I know that it's a back and forth. And so when it's going back and forth, like, let's go, I'm gonna go down to the 2-minute. Let me take. Look at all of this back and forth. Took its big run up, it's coming back down. That's that run up we saw, came back down and up. It's kind of a, you see here, this is why I say you have no 4 points. When I don't have 4 points, I don't trade. I don't care what it is, because I know I can get caught up. You can't, no matter how you look at it, yeah, you can try to find a trade. Now, I have nothing that even tells me that to trade. I don't have nothing that tells me to trade up or down right now from that chart. Now, if you guys can show me something, but based on my rules, I wouldn't know what to trade on this. I wouldn't know if to take a buy or a sell. Does anybody else see anything different than what I'm seeing? I'm willing to listen. I want to hear. But so this is why, I didn't get, and I knew that from just looking at the 1 hour. I didn't have to go into the detail to tell you that it was going to be doing this, because, I've trained my eyes to see it, because my 1 hour analysis is telling me they pulling their money out. They're pulling their money out. Because remember, it was way up here. This body was way up here. They're pulling their money out. Once it gets to here, take that down, take that to the bank. Any questions on anything I've shared today? Where'd my chat box go? Okay. Oh, Dina said, wow, earlier. Okay. Y'all quiet. Y'all quiet on me again. Oh, am I out of, let me make sure. Oh yeah, I'm in real time.
I'm just taking it all in. Yep, it's a lot.
It is. which is why I didn't really want to teach it in the 30-day challenge.
Well, I'm
'Cause it's
glad
a
you
lot.
did.
Great nuggets, great nuggets. This is foundational. This stuff is foundational.
Yeah. So, like looking at this, I wouldn't, if I was to get in the market right now, I wouldn't know where to go right now. Right? This is a 30-second, you guys. So even if I wouldn't even know how to tell you guys to trade right now. I know it's going down because I know they're getting their money back. 1, 2, 3. This might be 4. We got to wait for it to finish. Hopefully, you know, what I would want it to do is break below this, if not this, before I even thought about a trade, right? And if I did, I would come up to, look, I'm telling you, you go to the higher. I'm on the 30-second. And why does the 30-second match up with everything? Look at this next zone. Like literally just by defining them this one candle rejection, you know, those one candle rejections, it tells you where the main place you need to worry about on the lower time frames. The one candle rejections on a higher time frame are powerful. They're powerful. I'm telling you, they're powerful. Takes you right to where you need to be. You just have to go further back to see it, of course. All of my purple are in, look at accumulation zone. Oops. Accumulation areas of where it had to break through something to get out of there. Look at, telling you. So when it comes back, it knows it's gonna have some struggle there because it already had to struggle to get out of there, right? That's all it means. I'm breaking it down to you in plain English. That's all it means. Like I had to struggle to get out of here. Oh man, I gotta go back here. I'm gonna struggle. I'm gonna have to come through with a wall, you know, break down that wall again. I already broke out of here, right? Look at this. One candle resistance. What are we having here? This is on the 30-second. Then one candle resistance, powerful. Tell you exactly where you're gonna stop. You might not stay stopped, but you're gonna at least stop and recognize it. Okay. So sorry, I thought we was gonna be able to get a little bit more trading in, but it's 9 o'clock and we didn't. Yeah, but you guys do have some setups. If you guys put a pending order, I gave y'all some trade setups. Y'all can practice y'all position trading.
Right.
I gave y'all some trade setups for NAS. Yep. So that's what I'm gonna do. I'm gonna practice some position trading. I might even scalp it a little bit at the same. I might have a position and a scalp, do a little scalping if I get, you know, get wind after, but I'm not doing nothing. I'm putting an alert on the 23.6 on the 1 hour. Oh, I might do it on the 15-minute. And then that's what I'm waiting for it to pass, because it's everything in between there is iffy. Like I know this is a for sure once it passes here. It's a for sure. I can go and eat and do whatever else. Yes, Erica, please remind me. And if I don't, please chime in. But I'm gonna stay. Erica. Like I gotta get Erica together. Okay. Anybody have any other questions, comments, concerns? Even like this move down, it's gonna go back 50%. I bet you if I put this, just anytime you see a move down where you see no blue in here, you know it's coming back to at least the 50%. Look at that. Just try, go do some back testing on it and try it and see. You'll see, you're gonna be like, OMG. It's gotta breathe. Everything has to breathe. just a function of the universe. Everything that's living, that's moving, that has energy attached to it. It may breathe differently, but it has to have a method of breathing. You just got your indecision candle here, right? You just got that indecision candle. Watch how it moves now. Don't let it trick you, because remember I told you about stop hunts. That's an indecision candle. Don't let it trick you. It's just funny to me because I know they tricks. Like, it's so funny to me. Why would you go and do all of that? Really? Like, they funny. But again, once you know what they're doing, it's funny. I just mostly with trading get mad at myself for not following my own rules because I know what they're doing. I just, it's just my discipline. If I stay disciplined to do what I know to do, because sometimes we get caught up in the emotion. It just is. So, you still scalping, Nina?
No, I'm done. Yeah, I
You
was
done?
really just concentrating on what you were doing. At one point of time, I used to set my levels using the Fibonacci, and for whatever reason, I got away from it. But I did see like how price always respected those Fibonacci levels. I think I may have did it maybe on the 15-minute, but now I set my levels on the 1 hour. So it's kind of almost similar to what you're doing, using the 1 hour and then just looking at how price respects it. So now I'm going to just put my levels with the Fibonacci and just see how close they are.
And do you know why I did the 1 hour versus any other time frame?
Share
No?
with me if you have missed it.
Okay, so the reason I did the 1 hour, I'm gonna just take this off really quick so it doesn't confuse, but you see it staying around the 5061.9. I just wanted to show you that from this move. And this is on the 30 seconds. This is the 30 seconds I'm on, and it does it no matter what time you're on. It's not just the higher time. This is a 30-second with these big candles, and it still went to 50% before it's starting to come back down. But anyway, the reason I did the 1 hour was because when I was doing my analysis coming off of the daily, and I saw this double top, right? I know this is a big institution candle, so I know it's got to come back and retrace at least 50%, right? So what I wanted to do is see where in this retracement back down, right? In this move back down, because they got to get their money back. So that's what we were talking about. This is an institution candle. It still got 4 hours, 5 hours left in it, but we still know institutions move this, right? So in this daily institution candle, I want to know where could I get caught up? So I know right here at the 20, see, this is basically, if you notice this fib, it ends up being this move, this whole move up, right? This whole last move up. But of course, I did this on the lower time frame. So when looking at this, I want to know I know it's going down because they got to get 50%, but I want to know, are they done moving up and about to go down? So when they're done going down, done moving up, how I know they're in a valid retracement is it passes the 23.6. So that's one thing. So I know that it's got to get past the 23.6, but the next thing I want to know is, where are there some possibilities that I would see resistance? So where it would go back up and then, come back down, because I'm looking at potentially taking a trade down. And I know that trade down is actually, well, it's not, it's sideways on the daily. On the daily is sideways, right? It's not up or down, it's sideways. The range is sideways. So I want to definitely know when I could possibly get caught up, because sideways means it could go up or down. So now I'm going to drop down to the 4 hour, right? And I'm just trapping this move up. I'm just trapping this move up. And the way that I know if there's a possibility that I could get caught up is I'm looking for that 1 candle resistance. I have no 1 candle resistance here on the 4 hour. So then I go to the 2 hour. Well, I have 1 candle resistance here on the 2 hour. Okay, that's pretty good. But I know that it's probably going to come back to at least 50%. This is 786. So I know there's some other areas in here that may have 1 candle rejection. So to find, I'm gonna go to the lower next time frame down, which is the 1 hour. So this is the only reason that I focused on the 1 hour, is because when I went to the 1 hour, I got these one candle rejections right at the areas, the 38 and the 50% area. And, you know, so those are further confluences. I got it at the 23, the 38, and the 50. That's not coincidence. That's confluence. So for me, that tells me that this is the time frame that matters. Like, this is the time frame that I need, because I have the most confluence on this time frame. It even confluences with the 786 zone. So I have the most confluence on this time frame. So this is the time frame that matters. So so this is where I'm going to be. This is my analysis time frame. Now I know that now that I got my analysis time frame and the trade that I'm looking for, now I'm just looking for the things that's going to validate me, which would be the validation of the retracement would be that it went to the 23.6. So up until it gets here to the 23.6, it could go back and forth, or it could go up. I don't know which way it's going to go, because I have no valid confluence that the retracement has started. So once it passes the 23.6, I know that the retracement has started and that I can now start taking my sells. But up until I get that, I don't know what it's going to do, because we just see it stopping here. It's not really, just looking at this, you have, like, if I'm getting into a trade at this point, I have no clue which way it's going to go. Now, when I drop to a lower time frame, which is the lowest analysis time frame I'll do is the 15-minute, I can see that on the 15-minute, I have a double top here, right? So being that I have a double top right here, that it's already broken down, came back, you know, it's probably at the 50%. Let me see, did it? We can see that this candle went to, this red mark is 50% of it, but it went back up. So it reignited it again. So we have to, you know, I'm pretty sure that it's going to complete, but we're waiting to see. So that's what I mean. Like, it's back and forth. I have no direction of which way it's really going to go. Well, why trade in that when you know that if it breaks above here, it's going to continue in a buy above this double top. It's got to break above this double top box, because all the way up until it breaks above this double top, it still could go back down, right? So on this, if I'm doing position trading, not scalping, I'm doing position trading, I have an alert here and I have an alert here. Those are my two areas where I have a position. So what that means is if it breaks above here, if it breaks above here, it's probably going to do that. If it breaks below here, so now I have my two biases. I always, whenever I get in the trade, I always have two bias. I don't have one. And we're taught to have one bias. No, you should have two. You should know that if it goes here, it's going this way. If it goes here, it's going. You should, anytime you go and you do an analysis and you think you have a potential setup, your setup should include two biases. You guys understand why I say that? Okay. All right. Let me see. I had a question and then I'm going to get out. Okay, Howard. No problem. See you tonight. You had to leave. All right. So you guys understand why, you know, by having two biases, you're not, it trains you not to get stuck on one analysis too.
So in what you just showed me with the Fibonacci, you've saved me some time and some steps. So now I can just kind of zoom into something a little bit more present in summary. Yeah.
Okay.
But yeah, I totally understand what you did, and I appreciate. So I know even Jay had told me at one point of time, like, because I usually have like a strong bias in one direction, and he told me like you need to have a strong bias in another direction just as well as your bias in the primary direction. So this is just a refresher.
Okay.
So a lot of great nuggets and takeaways. Thank you.
Thank you. Thank you. Thank you. Okay. All right. So I'm gonna stay back and help Erica. I'm gonna turn off the recording and then, I'll see you guys tonight. Hopefully we'll get some trades in. If not, I'll just, let the Lord lead me and do some more teaching. I guess it's meant for me to practice my teaching, I guess. I don't know. We'll figure it out. All right.
Amen. Amen.
Thank
All
you,
right.
Sissy.
You
Okay,
guys,
bye.
no problem. You guys. Yes, Charles.
Charles.
Yeah, I was just asking you, you don't patent your stuff?
So it wasn't, it's not because it's not something that is, so remember with a patent, you can copywriting is easier than patenting. Patenting, it has to be something original. You have to show the originality of it. And it's not necessarily that it's original because it's just the way that I'm taking the trade. So yeah, it's copywritten, but not patented.
Okay. Well, I'm sorry what happened to you.
It's you know what, it's not, it's so, you can't, as long as you don't take my money on my account, I'm cool. Like
No, I'm just saying,
you
it's
know what
just
I'm saying?
sad,
Like
it's
you
sad
can
how
take,
people do.
yeah, it's, yeah, hey, gotta leave it to God. I'm not even gonna mess my day up,
But I appreciate the trading strategy about the one, the one candle thing, because even though we learned that in FMI, we learn a lot of that. What you helping us to appreciate the look for these things that we might not be paying attention to, going down to the lower time frames.
Yeah. Yeah. Again, sometimes, like you'll get it, like they might mention it, but it'll resonate when you're ready. Like I always say, when the student is ready, the teacher will come. So sometimes some of the concepts that you may have learned, you were learning before you were ready to take on the fullness of it, so now that you probably passed, like you were in the beginning, so it was a lot that you was trying to learn all at once. But now that you're more settled in your training and your skills, now you can take on some more advanced concepts and like you can remember, like I remember they said that, but now it'll really resonate because you have a fuller understanding of other trading concepts, which helps you to understand that trading concept. So I say, when the student is ready, when you're ready, the teaching is going to come.
So what I learned from here is, okay, I learned my strategy at FMI, but when I come to your platform, I close my ears off to that and I focus on your platform, because everybody have a different way of doing things. And if you're gonna be successful in this platform here, you got to really understand, stay in tune with your strategy,
Right.
And then if you want to start making, things on your own, like when you're doing your own little thing. But you gotta, I done been in different schools, so I learned different strategies from different schools. But I still stick with FMI, but I tune the stuff out for right now and focus on what you're trying to tell me right now, so I can keep this strategy focused. I like it too.
Okay, I'm glad to hear that. We're gonna get it together. Don't worry.
No, I'm good. I see your strategy working, because I have my computer sitting here. I have you on the screen. Did Robert ever get that the thing I was trying to get to you yesterday about, and my mic went out, was that I have the MT5. What I did, I downloaded it, and I sent the download to Janet and traded the other thing we use.
Trading View.
Yeah. No, I sent it to you in what's that other blue thing that we
Telegram.
Telegram, yeah.
Oh yeah, Telegram, yeah.
And that's what, and see, Robert tried to get me to send in his email. His email wouldn't take it last night, but I could send it to him in Telegram.
Okay.
And that's
Yeah, you can just go to the download. You could just go on. He could just Google it. You didn't even have to send the link. It's just a download link. But yeah, you can Google it.
But the firewalls, I had a hot problem with my firewalls.
Okay.
So he did the link. We had to do the link.
Yeah.
That's what happened.
Bye, Joy. We'll see you later. Bye-bye. Anybody that wants to get off can get off, because like I'm literally just gonna help Erica. I'm done teaching for the day. I mean, till
Okay.
tonight.
Okay,
So if
have
you
a
guys
good day.
have to go,
I'm
that's
leaving.
fine. Have a good day. But yeah, thank you, Charles. Yeah, I'm sure he'll get it. I have MT5. So,
Yeah,
but
yeah.
you
I was
can
just,
share it with the group.
just trying to help him. Yeah, because I was trying to figure out a way I can put it where they can just get it, because sometimes with these firewalls, it, like Janet, she had trade guard, ad guard, and I had to do a lot of troubleshooting to find out what she had in order that was blocking it. And so then after I had saw she had ad guard on there, I closed it and turned it off, and it still was giving her. So I said, okay, I'll just send it to you, and you just go ahead and download it from Telegram.
Yeah. Yeah, no problem. So, Tedra, you just need, you don't, for MT5, you can Google MT5 if you need, so you know how when I'm trading in, you can just Google the download for MT5. And it'll look like this, MetaTrader 5. This is what it looks like. And depending on if you're doing it from, they have an online web terminal, that's what that is. But if you want to download it onto your computer, the download for Windows is here. And then you can get it from the App Store, from Google Play or the Apple App Store. So you can do both of those. But it's basically when you see me, when I'm showing you guys, let me see. I don't have it up right now. So let me see, MT5. So when you guys see me, once we do the daily bread and this is MT5. This is when you see the trades. I'll show you the trades that are activating from daily bread. That's the MT5. So this is what he's talking about is MT5 here. So you can just go to the link you can just Google it or put it on your phone, whichever, depending on how you trade. Yeah, you can just Google it and get it. You don't need a link. You just can Google it. So, all right. All right. Well, you guys have a great day. I'm going to stay back and I'm going to turn off the recording, and I am going to stay